Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 1st of August 2020, and we're publishing our gold and silver weekly update for the week ending the 31st of July. Now, before we do this, we wish to congratulate one of our subscribers, John from England, who back in March bought silver via Bullion Vault for just under $13. This was the time, you may remember, when premiums were silly. And we did advise not to pay those hefty premiums, but to look at alternative ways of acquiring silver. As being lower than $13, it was undoubtedly a good deal. Well, he purchased a few £1,000s worth, and last week he sold his holding for just under $24, making an 85% gain in 4 months after all storage costs and commissions. Now, we have to admit, we would not have sold last week, but would have still hung on. But nevertheless, it's still great to see our subscribers making profits with their holdings. We have to confess, this was also the time some critics condemned us for recommending a means other than physical. Now, whilst we see their point and believe that physical is necessary, especially in an Armageddon situation, one should not just see physical as the only means of acquiring gold and silver, especially if one is not intent on holding on to it for a long time. Now, also for those who did pay the premium at or around March and April, and paid anything from $23 to $28 an ounce, and particularly those in the United Kingdom paying VAT on top, at the low end, despite considerable rise in the price of silver, you may have just about broken even, and at the high end still underwater. That is, of course, if you tried selling that silver back to the same dealer you acquired it from. Now, yes, we admit you would get more on eBay and the like, and we are confident you will certainly benefit having bought it longer term. But, as mentioned earlier, the physical is not the only means. And we even heard, in fact, on one of the Cambridge YouTube videos, the so-called silver guru actually stating that one should buy physical in the first instance, but not confine oneself to that. In fact, David Morgan suggested buying the miners as an alternative, or in addition. Now, at a similar time as John, a few other members have invested in gold and silver around March, April, and are profiting quite handsomely too, but we haven't had their permission to mention it. Anyway, back to our weekly analysis. Gold rose $73 last week from $1,902 to $1,975, having hit a high of $1,982 and a low of $1,902, a rise of nearly 4%. In sterling terms, gold finished the week at £1,510. That's up £23 or 1.5%. And in euros, it closed at €1,679. That's up 47 euros or nearly 3%. So from this, you can see that the dollar was the weakest, sterling was stronger than the dollar, but the euro was stronger than sterling. Silver rose $1.62 from $22.79 to $24.41, having hit a high of $26.22 and a low of $22.35, a rise of 7%, following the previous week's rise of 17%. In sterling terms, it closed at £18.66. That's up 85 pence or 4.75%. And in euros, it closed at 20.74 euros. That's up 1.19 euros or 6%. So very healthy gains indeed all round. The gold to silver ratio fell again this week from 83.5 to 1 to 80.9 to 1. Interestingly, for those who follow cryptocurrencies, Bitcoin rose over $2,000 this past week and currently stands at $11,646, up a phenomenal 21%. The Dow Jones closed on Friday at 26,428, up 114 points on the day, that's Friday, and down 41 points on the week. The S&P 500 closed at 3,271, up 24 points on the day and up 56 points on the week. And the Nasdaq closed at 10,745, up 157 points on the day and up 382 points on the week. Oil prices, or certainly Brent crude, was little changed. It closed at $43.52. That's up just 18 cents, that's 1/8 cents on the week. And WTI crude closed at $40.27. That's down $1.07 on the week. The dollar index stands at 93.3, down 1.09 points on the week, but it was quite a bit lower than that during the course of the week. Well, another exciting week both for gold and silver, with gold just coming within a sliver of $2,000, though it did reach that area in the futures market, and silver at one point sailing through $26. Now, we did have a pullback as we predicted, though. Admittedly, we were a day or so out, but we must admit Friday saw another strong recovery. So looking at the technicals, gold support level is well established at the 10-day moving average, close to $1,911, though there are some small steps below the current price to that support level. Short-term and medium-term momentum has turned positive, but both the fast stochastic and the RSI are suggesting a correction. That said, looking at the daily swing chart, the main trend is also up and prices would have to fall as low as $1,819 to convert the trend to down, and virtually no one is signaling this as a possibility. However, there are some muted voices suggesting that should gold reach $2,005, this may act as a top from which there could indeed be a correction. Remember, though, we're talking about technical analysis here, not necessarily some guaranteed prediction. If we were advising day traders, which we're not, we would suggest to let the profits ride, but protect the downside just in case. There is no doubt the dollar weakness was one of the main beneficiaries for gold this past month, as equity markets have held firm so far. The level of stimulus and the promise of even more by both central banks and governments around the world have at last convinced investors that buying gold and silver is the sensible investment opportunity and practice because of currency devaluation short-term and potential inflation longer-term. The COVID-19 crisis has created a high degree of uncertainty and fear, and with nearly 18 million cases worldwide, of which 4.7 million are from the United States, and with over 157 deaths there and growing, it is further feared that the economy of both the US and many of its trading partners will not be as robust as many anticipated or even hoped. Silver has had another great run this past week. Pulled back on Thursday but regained upward momentum on Friday, closing virtually at the day's high. Technically, silver met with resistance near the 24.50 level, and if it surpasses this again, this will meet its next level of resistance just below $25, closer in fact to $24.95. If it sails past that, then the $26.20 high we saw this past week will be the next target. Now, much depends on the stimulus package being announced by the United States, economic data to be announced later in the week, and of course the value of the US dollar, which many currency traders now view as being oversold, so are expecting a correction into more positive territory for the dollar. The most likely scenario from a technical point of view this week for silver is oscillation between the maximum low envisaged of 22.30 and the maximum high envisaged of 26.20, though we suspect the range will be tighter than this. During the course of last week, we published a few videos providing updates on some of the economic figures to take into account, including commentary from the FOMC of the Fed, which left rates unchanged, but provided what one can only describe as a very dovish stance on monetary policy, promising to continue supporting the markets and the economy, no matter what it takes to do so. The GDP figures for quarter 2 were terrible, just a slither below minus 33%, but ironically marginally better than the 34.6% or minus 34.6% many predicted. Jobless claims were similar to the previous week at 1.43 million, which is beginning to cause concern that the recovery in jobs is not as robust as the president predicted. Consumer spending rose 5.6% in June after a record 8.5% jump in May as more businesses reopened. Expectations had been for consumer spending to rise by 5.5% in June. Personal income, however, dropped 1.1% last month after decreasing 4.2% in May. Now, looking at the economic data to be announced this coming week, and there's a lot of it, on Monday we have the Market Manufacturing PMI for July and the ISM Manufacturing Index for July. We also have motor vehicle sales for July. Tuesday, factory orders for June. Wednesday, ADP employment report for July. That's important. It'll give us a good indication as to what's likely to be announced on Friday. The trade deficit for June, market services PMI for July, and the ISM non-manufacturing index for July. Thursday, household debt for quarter 2 and weekly jobless claims. Again, the jobless claims being an important factor to look out for. And then on Friday, the non-farm payrolls for July, unemployment rate, average hourly earnings, all for July. Wholesale inventories for June and consumer credit for June. So probably the busiest week for economic data that we will have this month, with each day potentially having a market or a marked impact and 3 separate job figure evaluations which, if consistent, should show the extent to which the US economy is recovering or whether that recovery is now beginning to decline again. What can we expect then for prices this coming week? Well, the answer is quite a lot of oscillation and no doubt exciting days, quite possibly in both directions. We can certainly see gold attempt the $2,000 level, if only out of bravado, and silver will undoubtedly stretch to $25. However, this market is so data, dollar and COVID-19 dependent, it is impossible to make any accurate predictions at this stage. In addition, we also have President Trump's ongoing feud with the Chinese, now attempting to ban the TikTok app, and Joe Biden choosing his running mate and announcing it this coming week, all of which will add to the rich tapestry of news. What do you think is going to happen to precious metal prices and the dollar and on the political front? Do share your thoughts. Thank you so much for listening, and if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they're published. Not forgetting that we update our Richard and Greg channel every few days, though we have missed for 4 days, I think, recently, and that will be corrected over the weekend. And once again, if you haven't subscribed to that channel, please do so. We trust and hope that you have an enjoyable and safe weekend as always, and a prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.